Hello, listeners. Welcome to this episode of Cryptonomics. Before we jump into today's discussion, please keep in mind this recording is for general education and is not intended to constitute investment advice. Any opinions expressed are those of the participants and do not necessarily represent those of Witham. Hello, everyone, and welcome back to Cryptonomics, brought to you by Witham. I am your host, Mark Eckerly, and today our guest is Joey Ryan, who is the CFO at TrustSwap. TrustSwap provides blockchain-related multi-chain DeFi tools and services to both corporate as well as retail customers. They have four main products, which we'll take a deeper dive into on today's episode. But first, welcome to today's show, Joe.
Thanks, Mark. Good to be here. Good to see you again. Mark and I go way back in the crypto space. I think when you're past 2018, it makes you a crypto dinosaur. So it's good to be here and good to reconnect.
1 year in this space puts a lot of gray hairs on your head, and it's like 10 years in any other business, right?
Absolutely. I got the grace to show it for sure.
So do I. I got to keep the long hair so it kind of hides them a little bit better.
I hear you. Yeah, trying to do the same.
But let's kick things off first with kind of your crypto journey, right? Because I know you've been in this space for quite some time. Like you said, 2018, back then, it's been a while since where we were and where the market has evolved to since then. But talk to us about your crypto journey really quickly, how you got into the space, what made you fall down the rabbit hole, and then ultimately how you ended up at TrustSwap.
Yeah, so my journey begins probably 2017, and I'll drag this out for fun. Actually, it may have even been 2015. I was working at EY at the time, so I'm a CPA. Started out in public accounting. Was working at RSM, and I've also worked at EY. So I was working at EY at the time. It was a late night, trying to wrap up an audit, and a partner. I was there with my team. We're the only ones in the office. This was, again, I believe it was 2015. A partner came barging into the office, again, 8 o'clock at night, 9 o'clock at night. Started just screaming nonsense about Bitcoin. Have you heard about Bitcoin? Blockchain, it's going to change things. And, me and the 5 of my other team members, looked at this guy like he was off his, get out of here, crazy old man, crazy
off
old
his
partner.
rocker.
What do you, yeah, what do you, we're trying to wrap up an audit on, some client. I don't even remember the client. And this guy's trying to talk about Bitcoin at 9 o'clock at night during busy season. So get out of here. I have no idea what you're talking about. But that was the first time I ever heard of it. And I do remember not the next day, but I want to say after we, busy season kind of calmed down, or maybe after we filed the client. I think we were getting close to filing then. So maybe it was a week later. In my head, I was like, I wonder what he was talking about. And I remember kind of Googling Bitcoin at the time. I don't remember if Google was it was a thing back then. And, the search results back then, when you're trying to figure out, I remember trying to figure out how to buy it. I was like, maybe I could buy $20 of it or something. And back then it was paper wallets. I remember I had no development experience at all, had no idea anything about coding or anything. And it was all underground Reddit threads on creating paper wallets and sending money to some random wallet address, blah, blah, blah. And I was like, what is this shady, am I going to get hunted down by the feds here? No way, right? So I kind of pushed it to the side, and it re-rose again. So that was kind of my first hey, what is Bitcoin? It re-rose again to me in late 2017, 2018. This was when the AICPA really started pushing out a lot of their, if you want to say, propaganda around how Web3 and blockchain was really going to revolutionize accounting. So I started going down the rabbit hole from the accounting angle back then. That's where I really understood what blockchain was, what Bitcoin was, how it works, the decentralized nature, all that fun stuff when we all kind of have our own, if you want to say, enlightenment period on how blockchain and crypto works. So when I came out the other side in 2018, I realized that, hey, at the time, again, I was still in public accounting. I was like, hey, I should either kind of become an industry leader in crypto and blockchain as it relates to accounting within my CPA firm, or better yet, let's create my own, or work on creating my own kind of crypto accounting solution. If we see that payments through the blockchain and accounting utilizing the blockchain, utilizing cryptocurrency is kind of where the future is heading. Nobody's touching this right now, and this could be a significant problem that you're solving in the space that a lot of corporations are going to have issues with going forward. So ended up saying, F it, let's take the dive into starting my own company. And at the time, and let's say not starting my own company, but was definitely doing research on crypto accounting and where I could take it. And at the time, met Gil, who had an idea around Gilded, or I guess just started Gilded at the time as kind of an crypto invoice payment solution, integrating invoices, payments with accounting. We kind of had the initial idea, and met Gil and kind of our other co-founders, Ken and Reina, and we co-founded Gilded at that time in 2018, around the idea of kind of crypto, like I said, crypto accounting, crypto invoicing being that integrated tool that companies, businesses, freelancers need in order to track and perform their kind of crypto accounting operations, right? So kind of took off from there, went really down the crypto accounting rabbit hole from there. We got into Techstars in 2019, which is a startup accelerator program very similar to Y Combinator. And that's where we ended up making, obviously, a lot of connections in the space, connections to Mark and Witham, plenty of other CPA firms that were at the cutting edge at the time, either doing audits or bookkeeping work, or if you want to say consulting work for crypto companies and projects that were kind of entering in the space during crypto winter of 2018, 2019. So that's really where my journey kind of started. At Gilded, we grew the company and ended up raising a initial seed round. And I was definitely part of the build structure and the initial growth of the company. Ended up last summer, getting a offer from TrustSwap to come on as CFO at TrustSwap, and kind of after doing my due diligence on the company and seeing the massive opportunity that TrustSwap has, kind of made the decision to move on over to TrustSwap, and that's kind of how I got to where I am today.
So going from a co-founder to a CFO, have you discovered any transition? I mean, I'm sure you were the CFO of both, essentially, right? So you've been wearing I'm sure, many hats in startup companies. So it's not just CFO, right? You're kind of running the whole finance team, the accounting team, working with strategy and ops. So you're kind of being pulled in 30 different directions, all trying to juggle one thing. So how has the transition been to TrustSwap, and what have you liked most about it so far? Kind of what's been the most exciting part after the first year?
Yeah, it's a good question. There's a lot of, when you're starting from scratch or kind of coming in to an area that, maybe had one person kind of doing some accounting function, you get to start with a blank canvas, right? Which is a great opportunity. So you can kind of build your finance and accounting department how you see fit. So I'd say there was a initial, pretty steep learning curve in regards to understanding the ins and outs of all the products we were offering, kind of all of our revenue streams, getting our arms around kind of the strategy and growth product map or roadmap, I should say, that we had when I first started. So, the learning curve around just understanding the business and the roadmap going forward, but also the learning curve around kind of building your own finance department. I had that opportunity at Gilded as well. However, we were still obviously super small as a startup. So the finance and accounting department, needed basically me and maybe one other person for some outsourced help. But here it's kind of, bringing on a full team of if you want to say outsourced bookkeepers, as well as some other consultants to help with kind of strategy and roadmap for control structures around the finance team. So as we're growing and scaling, that will get built out more and more, and that's kind of fun to be along the ride of, to see kind of your, what you envision starting to take shape, and seeing the benefits of, getting the right processes in place wherein it becomes a well-oiled machine on the kind of finance and accounting and ops side going forward.
Yeah. So jumping specifically into some of the operations at TrustSwap, right? Some of their offerings that customers can use, because it kind of runs the gamut, right? There's a lot of different avenues. It's almost a one-stop shop for a lot of users, where they can buy, trade, create, ultimately store their digital asset, right? So like, what does that? I mean, give me a quick rundown on all of them, because I'm sure we could talk here for hours on each one almost. But give me a high level, like, executive summary on the four major product lines that you guys have.
Yeah, so we're a company with, as you mentioned, four product lines. So the first product line, and kind of the ethos that TrustSwap was founded on, was, let's say, a smart contract escrow solution. So Jeff, our CEO, kind of found the company on a question that he posed in a cryptocurrency group, asking if there was a smart contract escrow solution wherein he could kind of do P2P fund sending or trades, or being able to send funds P2P through a locking mechanism, right? Without kind of getting rugged per se. Like, hey, we have a contract, you're going to provide these services, I'll put the funds in escrow and they get delivered to you at a specific period of time once the contract has been fulfilled, right? So when he posed that question, he kind of assumed that this problem had already been solved, and it hadn't. So that was the initial company ethos, was kind of a P2P escrow, smart contract escrow platform. And that grew to what we now have as Team Finance. So Team Finance is our first product line. It's a line that basically provides token locks, liquidity locks, vesting as a service, and token minting. And basically what those four kind of high level, if you want to say, products within Team Finance do, is it allows any crypto project that is starting up, creating a token. You can mint a token on our website with a few clicks of a button. No development experience needed. The token that gets minted is fully audited, fully smart contract audited. So it's a fully audited minted token. You can then create a vesting schedule of your tokens. So if you're a project founder, you're going to be giving tokens to co-founders. You can have those vest over a certain period of time. You're going to be giving tokens to advisors, maybe some pre-sale if you're doing an ICO. You can have set vesting schedules for kind of all of those initial token sales that you do as a fundraising round, as well as tokens that you're giving to advisors, co-founders, etc. So we have kind of a smart contract locking platform to set those vesting schedules and have those tokens kind of released along those vesting schedules. Liquidity locks. So again, you're creating a token. If you're going to provide liquidity on a DeFi exchange, Uniswap, QuickSwap for Polygon, PancakeSwap, etc., you can any project can provide liquidity on those DeFi exchanges, but they can obviously rug that liquidity if they want to. So within Team Finance, you have the ability to basically lock the liquidity that gets provided on those platforms. So a user or somebody that's looking to potentially buy those tokens knows that, hey, the liquidity can't get rugged because it's locked on Team Finance. And similarly with just general token locks, as we talked about, having tokens that you're distributing to founders, if you want them locked up for a certain period of time, you can do that. So it's kind of the all-in-one, if you want to say, security platform. It inspires the most amount of trust and confidence in a crypto project, that if they've gone through all the locking mechanisms and kind of launched their project through Team Finance, you can trust that they can't go back and kind of rug pull you if they've locked everything correctly. So it's providing a lot of value in the DeFi space in terms of all projects that are utilizing this again, it gives trust to the, if you want to say third-party token holder, that it's not going to be that it won't be a rug pull, right? So we're actually trying to expand these services to make team finance kind of the standard for all crypto projects to utilize going forward. Hopefully providing something like a security score for tokens that you could see when you're browsing tokens like on CoinGecko or CoinMarketCap or something. And that security score would be a score based on, does these projects have token locks locked in, team finance or other lock platforms? Is liquidity locked? Is it a safe project? Is it something you can trust that, you're not going to get rug pulled? So that at a high level is team finance. The other three products we have are a little easier to talk about. The second one we have is a launchpad service. So we help companies that are looking to ICO, obviously outside the US. Can't do that in the US. Or offer the participation to US investors. So it's non-US investors have the opportunity to basically invest in ICOs. So we will help these companies, with tokenomics, website design, any sort of product roadmap, initial implications or initial kind of renderings or design on some of these startups, and just kind of help them with their initial raise. So if somebody, company project wants to come to us, raise $1 million, we have a community of potential investors that are interested in, participating in what we're calling an ICO or pre-sale ICO. So we've helped around 40 projects launch their token, help them raise over $45 million total between those projects. So you're looking at, roughly $1 million or so per project. And some of these projects that we launched have so far been successful in terms of executing on their roadmap and strategy. Again, these are early stage startups, and when you're launching an early stage startup, especially since we've only been doing this for about a year and a half, these companies are super early stage. So they're, a lot of them are still developing or continuing along their roadmap to hopefully build out the products that can help, into the DeFi ecosystem going forward. So that's Launchpads. The third product line is what you mentioned before, the crypto app. So the crypto app right now is a portfolio tracking app that a user can utilize to track crypto prices, get crypto news. They can input their, if you want to say, exchange read-only credentials. So if you have, all your assets on Coinbase or you have some assets on Coinbase and Gemini, you can kind of input your credentials and we can track your portfolio that you're holding all together across all your different platforms. If you have tokens just on MetaMask, you can input your MetaMask wallet address, etc. So we have those tracking mechanisms within the crypto app to be able, for the kind of end user, Trader Joe user, to be able to kind of track their portfolio, monitor crypto news, etc. And the last piece of vertical that we have is kind of an NFT services platform. We help companies that are looking to launch NFTs or kind of create an NFT strategy. We can kind of consult with them and help them either create NFTs, launch NFTs, or get kind of into the NFT space.
So definitely a lot to unpack there. Well, I'll pick it apart in pieces a little bit. The first one is on the crypto app. I just want a little bit more understanding there. So just to clarify to our listeners, you're not transferring your assets, right? It's not that TrustSwap is taking title and they're being held like a common exchange or custodian. It's just it's simply read only. It's a portfolio viewer, portfolio management tool. Anything, because I think that's a clear distinction with where we are in the current market, right? You don't want to be transferring your assets to an exchange if you're in the self-custody business. Obviously, if you're buying and selling and trading, you hold assets somewhere. But I like to make that clear for some of our users or for some of our listeners, because with where the market's been over the last 2 months, you're seeing a lot of liquidity that's pulled off of exchanges. So you're kind of losing some of that user-friendly tools that a Coinbase or a Gemini or some of those exchanges have built in, as long as you're holding your assets there. So as you start to transfer funds from one wallet to the other, or from an exchange to self-custody, or whatever it may be, having tools like that crypto app are critical and crucial to understanding your portfolio as a whole, understanding your finances, your investment strategy, and your tax compliance at the end of the year. Now that's obviously a required question to be answered on your 1040. So I just want to make sure that everyone understands that the importance of what your app offers
Yeah,
as opposed to some of
absolutely.
the other
And
solutions in the
currently
marketplace.
we have zero, if you want to say custody or trade function enabled on the app. Right now, again, like you said, it's just a portfolio tracker. So it's just kind of read only, reading your asset balances and being able to determine your current balances, be able to track, again, your portfolio as a whole. So you don't have to kind of open up multiple sites to see kind of where things stand today. And it provides all the kind of news and updates that are most prominent going on, in the space today, or hourly per se, across the globe, right? Not just in the U.S., but across all kind of market sentiments globally. Now, ultimately, we do kind of envision the app to be greater than it is today. Enabling that kind of trading functionality, custody functionality, with other, if you want to say, earn functions potentially, et cetera, going forward. Also being able to track and trade NFTs. Kind of, we envision it down the road as being kind of the all-in-one app for all of your crypto needs going forward. But having that functionality where it can just be a portfolio tracker if you're kind of in the self-custody business or self-custody mindset, but it can also be your exchange if you're utilizing centralized exchanges. Now, I think, yeah, as we sit here today, and just for those listening, it is August of 2022, so you kind of understand where the market is at. During this time period, I think, as you said, a lot of people are kind of pulling off exchanges and holding, through the self-custody function. I think, centralized exchanges are not going away. I think there's, if you want to say it's a recapitulation maybe right now of centralized exchanges in the space, where maybe new regulatory guidance or proper frameworks or kind of lessons learned are going to be coming out of it, so that I think centralized exchanges, as well as, even if you want to say, interest-bearing exchanges like BlockFi, we obviously know what happened with Voyager and Celsius, but I think those kind of interest-earning platforms are going to come back as well and be just as popular. I believe, regardless of what people say now, if anybody can earn 5% by parking their funds somewhere, they're going to take the risk. And I think, we had a recapitulation event where I think some of those platforms were obviously over leveraged, over risked, trying to extend too much. I think there's a happy medium where you can earn 5%, you can offer 5% return in a, relatively safe model that, if the market collapses, doesn't result in kind of the downfall that we've seen. So I think there's ways around offering that. I think the two crucial things going forward will be like transparency for the users, so the users really understand where their deposits are going in platforms like that, as well as, like I said, the risk management, obviously, and regulatory. I think there'll be some kind of regulatory framework that will make kind of risk management and risk compliance more tight, which will, be able, and also I think there's methods where maybe you can provide that through a self-custody provider, with maybe providing insurance or something. I think there's just going to be something that's going to come out of it where, again, I don't think those models are dead at all, because people will chase interests where they can. And right now, the DeFi platforms are not the most user-friendly for new users to be able to utilize and use to earn interest and farm, et cetera. So I think those centralized models are still going to be around, especially capturing kind of the new users or the beginners, or the people that are not, living, breathing crypto every day.
Yeah, I almost like to think of it as if you think of just a financial institution, your standard financial institution, where it's like a run on the bank almost, right? Just testing the liquidity, see if the assets are there, the reserves. Um, and that's basically what happened in the crypto space. Like you mentioned, there were some that just were over leveraged and some that had the assets. And obviously, the transparency is key because, like we're seeing, we do a lot of work in the stablecoin space. So obviously, having some monthly attestations or something even more frequent than that to just provides the trust to your users that the reserve assets are in existence and they're not sitting in XYZ account being used for other activities outside of
Absolutely. Yeah.
supporting that one-to-one peg for a stablecoin. So similar to, I totally agree. Central exchanges aren't going anywhere. There's always going to be a need there. I don't know if they're going to be holding as many assets. And then when you think of what the interest-bearing accounts are, I mean, it's an alternative, and there's definitely going to be a use case for them in this space. I know some offered interest rates much higher than others, which is probably the appeal and maybe which drove some other negative causes and the reasons for some of the negative outlook.
Exactly.
But it's better than
Exactly.
your
Like I said,
0.01%
5% or even
basis
three,
point that you're getting
any
at
of those people
for
will
something.
chase that. And those percentages,
Yeah.
I believe there's very reasonable low risk ways that those percentages can be earned for customers or users of those platforms going forward. So that's why I'm saying, I don't think, I think it's kind of, going to be a mainstay going forward. And I think every kind of new industry or new niche within an industry has that kind of reckoning. And that's probably, what happened here, kind of the over leverage and high risk takers, got, got, I guess. And now, you come back kind of more with the right mindset going forward and stronger, stronger overall for the industry going forward.
Mm-hmm. Yeah, no, I agree. Now, I wanted to kind of, as we're looking into some of these offerings, I wanted to take a deeper dive into the first one you explained, which has a basket of services kind of underlying the general name of team finance, and looking into the liquidity management piece of specifically the vesting, right? Because we're coming across a lot of our clients that have token warrants for a token that hasn't been created yet. So it's like the idea, and some investors want a piece of that, of what that could look like in the future, as well as just vesting contracts for tokens that are created, right? So I kind of think of it almost like restricted stock
Mm-hmm.
awards,
Mm-hmm.
kind of, but not similar, kind of without the stock, somewhat. Where the vesting schedule, it unlocks, it's time based over X amount of months. But can you talk a little bit further about just what that is as a whole, like a
Yeah,
token,
absolutely. So
the
it's super
tokenomics behind
critical
that?
for any project that kind of launches and starts providing liquidity or starts having liquidity on DeFi exchanges, or if they strike a deal to be able to get listed on some initial centralized exchanges. Obviously, when you create your project and your token gets listed, uh, there's a lot of initial holders of the tokens. Again, not just the founding team, potential early team members, advisors. If you want to say pre-sale investors, if you kind of did an ICO round, right, that similar to when you're IPOing, right, you have investors that invest in a seed round or a seed stage and a Series A, right? So very similarly, you have the same kind of series of raises that occur where investors get in earlier than a public list price, right? So when companies or when these token projects list, you can, let's just say for all intents and purposes, the process at a very high level is very similar to like IPOing, right? It gets listed, the public now has access to buy, sell, trade that token anywhere in the world, right? Let's just take aside all the regulatory aspects. It's just like it's a similar thing that occurs, right? So you have those pre-sale early investors, et cetera. So it's a lot of initial people that have token or initial investors, initial team members, initial people that are driven by the success or highly invested in the success of the project that have tokens that come in at quote an early price, right? So it's important that those people that are in at an early price have a specific vesting schedule so that when the token starts listing on exchanges and now public has access, let's just theoretically say, your buy pressure goes up because now you have access to kind of the globe that can now purchase it. So if buy pressure goes up, if everybody that already on the supply side that was holding the token, if they have the ability to basically dump all of their holdings right away, that's where you see those initial spikes, and then all of a sudden it dumps like crazy, right? What's happening is those early investors and founders are just dumping basically on the public's head. You see that all the time in the regular stock market, right? Where companies list, their listing price day of or within a few days is super hot. It goes sky high as kind of Trader Joe buys his $500 worth of shares of whatever hot stock that just got listed, and all those early investors, seed round stage, Series A stage, they all start dumping on the public, etc. So it's very similar to traditional markets in that way. So it's super critical to have smart contract investing set up for those early stage investors so that, again, they can't dump 100% of their tokens that they own immediately upon listing, right? And the tokenomics around it is that you want to be able to have the token get listed and for it to slowly kind of rise in price as the team is building and creating more utility for the token, creating more value for the token, creating more utility for their project, etc. And that, ultimately, if the company and project does well, token price goes up, everybody makes a little bit of money along the way, right? So that's kind of ultimately at a very high level what you're trying to do with creating these tokenomics investing schedules is that, hey, as an early investor, I only can sell 2% or 5% of the tokens that I own upon listing, and then my tokens vest daily or weekly or monthly in this smart contract platform, and I have access to be able to claim those tokens and then do with them what they may. I think a lot of projects are seeing that kind of almost the hourly vesting of a very small amount over the course of once the tokens become unlocked, and just kind of either vesting hourly or daily along that very quick schedule creates actually the best equilibrium amongst token holders. Because if you're vesting and you're kind of manually airdropping those tokens to everybody once a month on the 15th of the month, you're going to have kind of those swings where those investors get their allotment on the 15th and then they're all going to dump, or there's going to be a big price fluctuation on that specific day. So a lot of these projects have now realized that the best way to go about to keep that kind of price volatility at a low point, so that it can consistently build up and rise, is to create that kind of hourly or daily vesting where the early investor or the team member then kind of can go in whenever they want to claim the tokens, claim their allotment that they're owed at that point in time, sell it on their own. So it kind of creates that equilibrium schedule of selling versus getting them all at once over like a month, right? Where it's one day a month that they get released to everybody. So by creating that equilibrium, it bodes the best for the investor as well as for the team as well as for the public. Having those smart contract vesting schedules is kind of the only way that you're guaranteed that these pre-sale investors and team members that receive tokens didn't receive 100% of the allotment and don't have the ability to basically dump on the public's head and crash the price down immediately. So it's super critical if you're looking to, buy a new token. Hey, I heard about this project. They have a token. Here's the utility. It seems like has some functionality. It seems like it could be something interesting. It's super important to understand the tokenomics and the supply. If you want to say the token supply that was issued to pre-sale and founders, along with the total token supply, understanding the ratios there, what they're vesting and locking schedules look like, et cetera, and kind of taking all that information before, I'd say, making your investment into that token.
Yeah, it's all part of the due diligence process when you're making your investment, right? And understanding the unlocking from the company's standard, right? And they will provide, from what I've seen, most will provide like that transparency, right? Because they want it helps provide trust for their users and helps support the token as a whole. And I agree, right? Where you said it kind of provides that even keel of not just on the release schedule, but also like the transaction volume, right? So it's not just it only trades on this one day because everyone's dumping when they get their unlock.
Exactly.
It's a smooth transition throughout the day to help create that volume, help create that market, and then it's a great use case when you think of this release schedule for what smart contracts can do, right? Because if you're doing that once a month or once a quarter, whatever it may be, that can be a manual process with definitely some human error involved. Not to say that when you're writing
Yep.
code for a smart contract, there's not the human error aspect of it, but it becomes very automated, right? You know you're going to get X amount over this time, at this hour, or this day, whatever it may be, and it helps continue to get that trust because that's all public knowledge. Right? I can go and decode a smart contract and understand the
It's right.
mechanics
It's
behind
possible.
that and what's going to
Yep,
happen.
100%,
I'm
absolutely.
not saying
And
I can because I
that's
don't know
part
code,
of the full
but it's
transparency
possible for
that we're
someone that does.
delivering to, if you want to say the crypto world, the DeFi world going forward, and that's kind of the purpose and the value, a lot of the value that team finance brings with these token locks, liquidity locks, and vesting schedules.
So let me ask you, after talking about a couple of these a little bit more, what are you most excited about with your full service offerings? Not to be like biased or one obviously provides more revenue for the company than others or something like that. Being the CFO, what are you most excited about from almost a user standpoint? And then is there anything that is currently in development or maybe a brand new service offering? Anything that like functionality wise that you guys are
Yeah, that's a good
kind of working
question.
on to
So
help
we have
release
a
to the
lot
public that
of
you
irons
think
in the
could really
fire,
bring
just
one
like
to the next
everybody
level?
else currently. The two we
Yep.
see all our services as four separate product lines, but I think in a perfect world, or kind of where we see the end game of what we can provide, is a full service suite that's fully integrated, kind of within, if you want to say, one app, right? So it can be B2B, potentially institutional product offerings through team finance and the crypto app, where you're offering, if you want to say, like liquidity, potentially like liquidity management solutions, or certain corporate account mechanisms through team finance and the crypto app. Through those two platforms, right? There's definitely an avenue there. We also see being able to offer like a full service, if you want to say, potentially like a startup out of the box service through team finance and launchpads, where, hey, you have a full, you have an idea, you want to launch a token, etc. We already have those kind of the main legs or Lego blocks in place to kind of create that launch of token through Launchpad services, and then kind of the locking mechanisms through Team Finance, but kind of creating an out of the box solution of like Team Finance provides all the smart contract locking, the minting, potentially any sort of business or legal initial documentation you need for incorporating your business, cap table structuring. There's a lot of different avenues we could go down, right? So we're kind of kicking around these ideas internally, as we're seeing where we're seeing the initial growth factors come in. But definitely team finance and crypto app, with a integration of launch pads. And I think ICOs are going to be more and more regulated over the next few years, which is great. Having the right regulatory clarity can really help you understand, okay, we have to have these licenses to operate in these jurisdictions. And as we all know, like startups, there's always startups that need funding. So offering, a full service suite of products to startups for them to be able to launch their own token is definitely an interesting path that we potentially see. And again, offering kind of that full service solution through the crypto app to not just your everyday crypto users, but also, as I said, like corporates and institutions that are looking for potential liquidity management solutions, or product solutions that integrate token locking, vesting, minting a token, etc., through a combination of products that could be created within the crypto app, where you have kind of your all-in-one dashboard for liquidity management of any cryptos that a corporate's involved in, or different products that could be offered through there. So, we see definitely a lot of growth possibilities in those areas going forward. As for NFTs, I didn't really touch on that with Swappable, our NFT service arm. If you look right now, I believe the NFT trading volume is at like an all-time low. I don't know if it's ever been as low as it has since NFTs like first started. So I think the entire NFT space is it's I think it's going to be the biggest part of blockchain and Web3 going forward. If you think about just what an NFT is, it's being able to basically tokenize an object on the blockchain. So you're able to, if you want to say like ratify or secure or legally verify an object on the blockchain. So, we started with like cartoon pictures and, Bored Apes and all of that. But I think in the end, everything like, or a lot of the physical assets in the world are going to be tokenized through NFTs. And it's going to be like the internet where you don't say like, oh, I work in the internet. So you're not going to say like, oh, I work in NFTs. It just becomes embedded into every other service and asset product line going forward. It's a matter of creating that jump. And again, we started with profile pictures and fun art because that's just how like innovation typically works. When something new and cool is out there, it's like use it for weird or like, if you want to say like not stupid, but like whatever fun use cases. Right.
Yeah, like
Right.
the use case
Exactly.
behind. I saw someone come. I was talking to someone a couple months ago, and they just had a picture of an apple, had no use case behind it. And I think you really hit the nail on the head where it's like, yeah, we started off with these pictures, these JPEGs that I could go get a Google image of. I don't think that's nearly. We barely glimpsed the surface of the NFT ecosystem. And I think when you look at NFTs, right, it's really going to be integrated, right? I almost view it as like when I go buy a good, like let's call it
Mm-hmm.
I don't know,
Exactly.
clothes or something, a handbag for my wife, whatever it may be. It's gonna
Right.
be like a digital receipt. Like that ownership is gonna be on the blockchain, whether it's a picture of that handbag or
Exactly.
not. I don't know,
And that's what.
but I'm gonna have ownership, and then I go and sell it to someone else or transfer it.
Yep.
I just transfer it on the blockchain, so you can see that
And
ownership
yeah,
piece,
and
and that
exactly,
bag is or
has use
watch is one
cases.
of 50 or
Perfect
whatever
use
it may be, and
case
you can really
right
see the
there is
collection there.
a consumer good. I think real estate, land. Imagine and now I've heard arguments against why you can't
Yep.
take real
Every
estate
market. Yep.
titles and put them on the blockchain. I don't know if it's right now just a functionality of the current process in place, but you would think that should be something. And I think real estate on the blockchain, like so many people have been like, oh, real estate on the blockchain, real like that's just been like a hot, if you want to say buzzword topic for the last 5 years. There has to be a reason why it hasn't gained so much traction yet, because that seems like a very, if you want to say simple or very winnable use case. But I think ultimately it will get there at some point. And that makes the most sense, especially, again, take your mind outside the US, where you have all these countries where there's titles to land that are disputed all over the place, and being able to have a full undisputed claim of title on land or real estate or property, etc. I mean, that's going to cause immense benefits globally going forward. Also, I think if you want to say decentralization of specific, and I'm using real estate as another example. So imagine somebody owns a strip mall, or a company owns a strip mall with 19 different lots. Now that person can kind of NFT it and be able to sell portions of that strip mall to investors that want to invest, even if it's $100, right? Hey, I got $100 in this strip mall in this area, and I get $5 return every month based on X, Y, and Z. So I think there's a lot of use cases around, and again, I'm just using strip malls as an example, but you can use a million other different larger assets that can produce that kind of same ability. So I think in the end game, however long it's going to take us to get there, that's where things are going to kind of end up being in the future.
Yeah, real estate does seem to be the easy kind of use case for examples most of the time. But there's a reason, like you said, it's going to take time. I think I don't want to say every. I think most markets are going to be disrupted somehow, some way, for good or for better. I mean, we're going to find out which one ultimately made sense. But no, it's NFTs. We can open up a whole nother can of worms just going down that, and then how that parlays into the metaverse, especially with the strip mall example you just gave.
Exactly, the metaverse. Yep. Yeah, and you can't have the metaverse without crypto or NFTs. So if we are, and I think the metaverse, with Meta or Facebook, whatever, and the metaverse, like the V1 versions of the metaverses we have, which are already pretty interesting. And I think regardless of what people say, the metaverse is coming, and it is going to be a space where a lot of people are interacting. A lot of future interactions will occur, et cetera, et cetera. But you physically cannot have the metaverse without blockchain and without having a digitally native currency for the metaverse, which is crypto.
It's basically to get access to get in.
Yeah.
It's like, I need this.
Right. Exactly.
I need a special token at an amusement park to get on the ride. It's like,
NFT, right? Exactly. Yep. Yeah. Exactly. So it's yep. So again, those will be here. I'm not going to try to predict the future, but it just seems very logical that is where where we're heading with things. And that's why crypto just doesn't die, because the use cases of blockchain technology will, as you say, should disrupt most, if not all, services and products and industries in the world.
Yeah. So just kind of put a bow on this conversation, we covered a bunch of topics today, and I think on most of them we only glimpsed the surface. So would definitely love to have you come back at some point next couple months. We could talk further about this. But where, I guess, for users really to learn more, how would they find your app so they could download it, learn more, and then kind of start integrating with some of the services that you guys offer?
Yep. So you can check us out. We are on iOS and Android. Website is thecrypto.app. We're only a mobile app right now for the crypto app. Again, portfolio tracker. Great to get all your news, great to track market prices. You can set alerts, all that fun stuff. Be able to get those nice price alerts at 3 a.m. when Asia's going nuts and things are going crazy good or dumps.
I was just thinking, when you roll out of bed, before you even get out of bed, you check your phone and you just pop open the app and you're like, okay, this is where I'm starting my day. Perfect.
Exactly. So definitely download, check it out, leave us feedback, etc. As we said, we will have a lot of growth initiatives within the apps, initiatives within the app that we're looking at to add in more products, more functionality for the user going forward. So check us out there. And for Team Finance, you can check us out at team.finance if you're interested in kind of launching a token, playing around with some of the features, or utilizing the features for your own project. Definitely check us out there. And you can check out TrustSwap at TrustSwap.com and kind of see all the other products and services we offer going forward.
Perfect. Well, Joe, I appreciate you joining me today. It was an honor and great conversation. We talked about a ton of stuff. So thanks for joining me on today's episode.
Yep. Thanks, Mark. Happy to be here, and thanks for having me.
All views expressed in this podcast by Mark Eckerly or his guests are solely their opinions and do not reflect the opinion of Witham. This podcast is for informational purposes only.